All right, welcome everyone to another edition of our weekly Lunch and Learn. This time we have a special guest with Aaron. Usually I have realtors across the country, but I want to include insurance in general because there's so many things going on, especially right now with the fires, but just in general, I feel like there's not much education in this space. Like I myself, I'm not really sure even personally what to always look for when it comes to insurance. And I'm pretty sure a majority of people feel that way. People may have a standard insurance that they have in mind, whether it's home, auto, umbrella. But Aaron will be able to give us some more light as to what are the questions and scenarios we should all be asking ourselves, but also how do we make sure we're being protected, but at the same time not overpaying for things that we may not need. So really looking forward to this conversation. It's going to be a good one. Now, before we do the intro, as usual, if you or anyone you know is considering to buy or sell here in the Bay Area, let me know. It's never too early to have a conversation. I've been able to help already over 20 people through these means that have reached out here through my podcast and through the videos that I post. So you certainly would not be the first one. So don't feel afraid from that perspective. And it's always been a lot of joy for people that have been able to find value through the shows. Without further ado, let's get going. So Aaron, welcome to the show. Please tell us a little bit about yourself. When did you get into the business? And actually, what did you do prior to being in insurance?
Thank you for having me, Spencer. Really appreciate you giving me the opportunity. So a little bit about myself. I was a SF State student, got out of college and was working at Coldwell Banker as a marketing director. Did that for a few years and ended up doing Social Security, went public for 8 years. And after that, decided I wanted to do something where I can work for myself and set my own schedules and actually interact with people because I like to work with people. So I jumped into the insurance 6 years ago and started my own agency and never turned back. Love it. Grew my business and been agent of the year 3 years out of the 6.
Amazing. And just kind of walk us back when you first got started. Like, was it like, tell us kind of the trajectory. Was it a really fast start? Was it slower than what you expected? Tell us kind of the early days and then kind of like how you generate business and how you handle the business these days.
Yeah. Well, the pressure was on once I signed my contract with Farmers because basically I had a 3-year contract and I had minimum quotas I had to meet. And so basically you got to hit the ground running or, let's just say you stop halfway or whatever, you're done. They cut your contract and they end you as an agent. So you kind of really have to prove yourself. So I definitely hit the ground running and worked really, really hard in basically doing a lot of networking, learning a lot about the products that we offer, learning about the ins and outs of claims and everything, because I want to make sure if I'm going to talk to a client, I want to make sure I know what I'm talking about. And I want to make sure I'm properly insuring my clients. And then that's how I grew my business. A lot of my business right now is mainly from networking and referrals of referrals, and so on and so forth. And that has grown my business tremendously. But with the fact that I have to make sure I want to protect my clients and I want to provide them the same service that how I expect to be insured and how I would be treated as a client as well.
Nice. And for you, were you always at Farmers, and why did you choose Farmers versus the other providers? What are the main differences from you as a business person on your end? And then what is the difference from just the general industry, whether it's like an Allstate, State Farm, and these other companies?
Well, the reason why I chose Farmers is Farmers is a great company. They've been around since the 1930s. They've been around for a long time. They're a great company. Their branding is there. But the main reason I chose Farmers is because of the legacy. Meaning, if let's just say after I grow my book to a certain size and I feel like retiring, I can pass this book on to my kids and they can take over my business. Whereas if you're with like State Farm, you cannot pass it on. Basically, you give it back to State Farm and State Farm gives it to someone else to manage. So it's kind of like my little retirement plan, basically, have my kids, take over the book and, and this way the clients can still, somewhat interact with me, even if I'm somewhat retired. That's the main reason why I jumped on with Farmers, that and, and the branding and how long they've been around in the market.
Got it. And they don't need to be a licensed agent. Like your kid doesn't have to be anything involved with the business per se. Is that fair to say?
No. They definitely do have to be a licensed agent. So my kids are only one right now, so they're not going to take over for years. So, over the years, I'm going to, if they decide they want to jump into daddy's business, then we'll get them licensed, get them trained, how to manage staff, learn the products. He's going to have to pay his dues and do everything I had to do, and proving himself that I can safely let him take over the business. So that, definitely that's going to be required later on down.
And then, so in the real estate business and somewhat of the lending business, there are measurements of how people can see whether they, an agent is a top producer or they're just some part-time person. Is there anything like this in the insurance business where there is some sort of semblance of, hey, look, this person is like top 1%, or this person is, just does one a year? Like, is there anything like that outside of maybe Yelp reviews, but is there anything else that can help people find like who's a really good insurance agent?
Yeah. So aside from Yelp, which on Yelp, I'm actually, if you look up, Daly City or San Francisco, Farmers Insurance, I'm like the top one with the most reviews and 5-star reviews. I don't have a single review that's anything less than a 5-star. And I tell my clients, if there's anything I can do to improve your experience, I'm always happy to make adjustments so that I can make sure that my clients are protected and make sure that my clients are happy with the service that I've provided. Aside from cost, I don't really get to choose the cost. It's always based on, whatever your driving record is going to be, or whatever your age is, or where your home's located. That's out of my hands. But other than that, you can look me up on Farmer's website. And if you type up my name, it'll tell you how many reviews and of my clients has written me reviews and what they think of me as well too. In terms of like an insurance industry standard where basically all insurance agents are rated, there's unfortunately nothing like that, which that's not a bad idea. Yelp is probably, Yelp and Google is probably the best factors that, basically, my clients get to review me on.
Mm-hmm. Got it. And so why don't we talk about the business itself, of especially with all the wildfires that's been going on? Like, are you dealing with any of your clients that have been affected? And so let's talk about that side, and then we'll talk about like how can people protect themselves if you guys are even offering that kind of insurance now. So tell us like what's been going on there.
Yeah. So fortunately for the people in like, the city of San Francisco, people that live in the city, they're not in a high fire line zone, but there are fires that could happen. It could be a wildfire, it could be a gas leak, explosion, it could be a lightning. For the people that actually am working with a few clients right now that are affected from the wildfires, some live in San Jose, some live in Santa Cruz, some live in the North Bay. And those people, what we're doing, right now, fortunately enough, I'm happy to report my clients have been super lucky. They've been evacuated and we paid for their hotel, putting them in a hotel, paying for their food expenses and everything like that, because that's part of the policy that we cover. Fortunately, none of their houses have been burned down, and they've actually lifted some of the evacuations. And I've checked in with my clients, and they said, "Oh, our house is fine. Luckily, they evacuated us. We're going to probably end up paying for some of the smoke damage to their personal property, like their clothes, paying for cleanup of the smoke, the soot. But we're lucky, we're fortunate, and my clients are fortunate that none of them so far I've been able to report that have actually had their homes burned down, currently. There are a few clients I have still in the active fire zones that have not had the evacuations lifted. So, we're just paying for their relocation for now and hoping for the best. So that's what we're doing with our clients right now.
And so what is the process for them as a client? Are they going through claims? Are they getting a hotel first and then getting reimbursed? Like, what is the actual process?
Yeah. So in terms of claims, it really depends on the agent. I personally like to take on claims myself, or either me, myself, or anyone in my office, my team that I've basically built. They can definitely call the 800 number if it's an emergency and it's after hours and I'm not able to pick up. But typically I check my text messages and emails religiously. So with how it works is you would file a claim with me. That's how I prefer. If you need to be relocated, if it's an evacuation or if there's an active fire burning your house, we obviously call the fire department. Don't call me first, and put out the fires. And then what we do is we file the claim, we find out what's lost. If right now it's unsure, we're not sure if there's a fire burning the house or not, then what we'll say is, okay, well, if you have an evacuation on your home, then we'll pay for your stay. What you can do is you can go to the hotels, obviously something reasonable, and then you can have them bill us directly, or you can pay it and we can get you reimbursed. Either way will be fine. I always tell my clients to keep all your receipts during this incident, because who knows? So it might be something that we're going to pay that you didn't even think about. Your toothbrush, like you don't have a toothbrush, so you got to buy a toothbrush, something like that. Like I always mention to my clients, if you have a claim, keep all your receipts that have anything to do with this, just to protect yourself in case we can, reimburse you for any part of it. If it's something that, that's going to be a long-term, and it's not like an active wildfire. I have clients actually like, oh yeah, we had a, plumbing issue and we can't live in the home without a bathroom. So we got to put you up in a hotel. We can actually bill the hotels directly and have them, hey, as he stays there for 3, 6, 9 months, bill us directly so that we can pay for their hotel stay, and then tell them to keep the receipts, and then we'll pay for their food separately.
Oh, wow. Interesting. And so
yeah.
how do premiums get affected by this? Like when it comes to insurance, I've always thought if it's not a big deal, you don't report it or you don't claim it because it'll impact, your premiums and your profile. Is that the wrong way of thinking of it? And like, how much would a premium change with, someone staying in a hotel for 3 to 9 months is obviously a very expensive. So what happens on the other side of I presume they have to pay for it somehow.
Yeah. So it really determines. So it's all case by case basis. Obviously, if you caused the fire, you forgot to turn off the stove, or if you left the water running and it caused water damage, that would be negligence on your part. Your premium would be going up higher than if, let's just say, a lightning struck your roof, right? But then also we have to account for what it's going to cost to rebuild. So how much money we pay out, if you're negligent or not, that's going to determine what your increase is going to be. For smaller claims, you're right, and you could be right. Let's just say, depending on what the payout amount is, what your cost of your increase. So let's just say if it's like, I got robbed, I have $1,000 deductible, and they robbed me for $1,200, or $1,200 worth of stuff. They took my bicycle, whatnot. And all right, well, for $200, after we pay out, that might not be a claim you might want to keep, for the type of policy you have, because you might get an increase that'll stay on your record for 3 years. So it really depends. It's case by case basis. It's hard to give you like a standard figure, but what you want to consider is talk to your agents, and they typically will know a ballpark figure what the increase is going to be based on what happened. Are you negligent or not? What is the payout going to be after we pay out the claim? And then they'll kind of give you an idea. Oh, we estimated we're going to pay you X amount of dollars. So then you can talk to them and ask them for advice. Do you think it's worth keeping the claim or withdrawing claim? If you withdraw the claim, it's a $0 claim and it will not affect your premiums. So you can always file a claim. Turns out we're only paying you $1,200 for the water damage and we have a $1,000 deductible. Nah, it's not worth it. I'll withdraw my claim. All right, no harm done.
Oh, interesting. So you can withdraw it. It's not, I always thought like once you report it, it's now stuck there, even if it was a $500 claim.
We will always be able to track the claim, but we will not increase your rate if it's a $0 claim. And I'm speaking for farmers. I can't speak for any other companies. I'm sure there are some companies that may increase your premium if you have a $0 claim just for inquiring. I'm not sure which company. I don't want to name any names, but I only want to speak for my own company. So for farmers, yeah, if it turns out to be a withdrawn claim, it's $0 that was paid out. Basically, if it's under the deductible or you withdrew your claim, we don't increase your rates. We just assume that basically we look at it as if it never happened.
I see. Now with all the wildfires going on, since it's in one way it's the past, but it's also seems like clearly top of mind for a lot of people. Is wildfire in general covered as part of basic home insurance, or is that a separate line item, or it depends on where you live?
Yeah, so definitely dependent on where you live. So every carrier is going to have their own appetite for what areas they want to include what coverages for. So like some areas will say, well, we're going to include fire. Like if you're in the city, it's low risk for fire, wildfire, all that stuff. If you're in a high wildfire hazard zone, then they may say, you know what, we're willing to insure you for everything else other than fire, meaning we'll cover your theft if somebody robs you. We'll cover if your home collapses out of nowhere. We'll cover water damage. We'll cover the liability if someone slips and falls, but we're going to exclude specifically fire. And then you can get your fire policy on a separate policy, separate coverage somewhere else. So that's a possibility. It all depends on the area. I have a lot of North Bay and a lot of Santa Cruz areas in the high, wilderness areas. A big handful of those will most likely need a separate policy for fire. But it depends on the carrier as well. Some carriers will say, you know what, I don't mind. So I've seen some carriers like State Farm might have a less of an appetite for certain areas, and I'll have insurance for them, which will include fire. Whereas, it's vice versa as well too, in certain areas that we may not want to touch where they have an appetite for. So it really depends.
So if that's the case, is it needed or better to shop around when it comes to policies, given what you just shared? Like sometimes when you mean by a separate policy, is that a separate policy within Farmers, or is that a separate policy with another insurance company?
So when I say separate policy, it's it's called the DIC. What you can do is you can get a separate policy like Farmers. Let's just say if we don't insure the fire, I can help you go through the California FAIR plan to get a fire policy, and it'll still be managed by me. But you would just have two separate policies because our appetite and our risk doesn't allow this area with fire coverage. In terms of shopping for insurance, you can always check. That's definitely up to the client, right? If you feel confident with this agent, and he writes you a good policy, but it's two separate policies, and you don't mind it, then that's fine. You might end up paying a little bit more versus someone that is a non-admitted carrier that will accept all the risk, but you're paying less. But if you don't like working with that agent, or that agent doesn't seem competent enough with you, that's your personal choice of whether or not you want to work with them. Same with real estate. If you feel, hey, what's the difference with one person writing me a offer versus another person, right? You want to make sure that you're confident with that person that you're working with.
Right. Got it. Okay, cool. And then what about like flood insurance? I know certain areas it's required. Even if it's not required, can you also order it? What about flood insurance?
Yeah, so flood insurance and earthquake insurance in California are always excluded on your policy. Water damage is covered, flood is not. And a lot of people get that mixed up. And I'll kind of explain that a little bit, and I'll talk about flood. So water damage is water from the inside out, such as your garbage disposal malfunctions, your dishwasher, malfunctions, a pipe burst in your house, your toilet malfunctions, your washer dryer malfunctions. That's water from the inside out. So that's typically covered under your policy if you have water coverage on your policy. Flood is typically not going to be covered unless you get a separate policy. For the most part, most companies are requiring flood separately. And flood is water coming from the outside into your home from an overflow of water from the ground up. So if it affects, 2 or 3 or 4 houses and it's overflow of water into your house from the outside in, that's most likely going to be considered as flood. In terms of flood, the cost-wise in the area and in flood zones, lenders. So the flood requirements are always requirements based on the lenders. It's not based on the client or the nobody's ever required to have any flood insurance unless it's a lender's requirement, because they see, hey, this is a high-risk area. I want to protect my interest because technically you don't own the house until it's paid off. So that's why they require flood insurance in specific areas, but that's all dependent on the lenders. Some lenders might say, hey, you know what, it seems okay, we might not require it. Some lenders might say, hey, looks like this is this seems, he's saying it's okay, but I'm going to require it if you want to work with we want to protect our interests. So it really depends on the lender as well. Same with fire insurance. If your home is paid off and you have no interest, you're not required to get fire insurance or homeowners insurance at all, but you're taking the risk and you're rolling the dice on being not insured if something happens. Got
it. And what about earthquake insurance? Like I understand it's actually very expensive. Mm-hmm. And you hear on the radio a lot, and I think that's with a separate company. I don't even think it's that big of a company. Does Farmers themselves have earthquake insurance? And how many people, just out of curious, of your own clientele have earthquake insurance? Like what percentage do you think?
Yeah, actually, earthquake insurance, there's a couple of things you can do. There's the California Earthquake Authority, that's backed by the state of California, and that's an admitted carrier, and they're the largest appointed earthquake carrier in California. They're a nonprofit. They were specifically created so that people can have coverage for earthquake, because Farmers, we don't offer earthquake insurance. State Farm doesn't offer earthquake insurance. Allstate, AAA does not offer earthquake insurance. So therefore, I'm appointed with the California Earthquake Authority to help you purchase earthquake insurance through them. In terms of cost, it really depends on location, right? So if you're close to the fault lines, it's going to be more expensive than if you were in Sacramento, right, or Stockton, nowhere near the fault lines. So for example, let's just say if we were to insure your home for $300,000 to rebuild it in San Francisco and in Stockton, the insurance coverage for earthquake may be $1,000, $2,000 for San Francisco for the earthquake policy. But in Stockton, for that same exact coverage might be $100. So there's a difference in cost because they know the risk, how close you are to, the fault lines, and what's the risk of insurance coverage. In terms of being expensive, you'll be surprised. Actually, if I were you, I would encourage that you talk to your insurance agent to ask them, hey, what's it going to cost to add California Earthquake Authority? For single family homes, because there hasn't been a lot of huge losses besides the Northern California Napa earthquake in 2016 and the 1989, the Loma Prieta earthquake. There hasn't really been any big claims. An earthquake usually doesn't happen in the entire California. It's going to only be in certain areas. And so with that said, earthquake insurance actually last year, they've announced that they've remapped everything again. And certain areas, it's going to be more expensive because you're closer, but certain areas actually have reduced the cost as much as 40% in earthquake insurance costs. So like mine went from $800 to about $400 this year after my policy renewed for earthquake insurance. Clients that have earthquake insurance, I want to say before, when I first started, when it was more expensive before they remapped everything, it was probably somewhere like maybe 10, 15%. Now I'm closer to about 25% of my clients are getting earthquake insurance because it's more affordable. And they know that if it takes 300 years to recuperate your money based on your monthly premium, simple math, it just makes sense for them. They want to invest. If I'm buying a $2 million, $3 million home, I want to make sure I protect my interest, so what's another $2,000 a year, right? So it really depends on the person as well too.
Interesting, but that's interesting. It's still at 25%. It's still not a much higher number like all these other insurance, options, right? So
yeah.
Is it because of the lack of knowledge? Is it because at the end of the day, because it has to be a really big earthquake to actually make the damage needed to have a repair too. It's not just a regular earthquake. It has to be a really, really big earthquake, right?
Yeah.
So is it the lack of education? Is it lack of knowledge, or is it something else too?
A couple things. So one could be cost, and one could be cost. Hey, this costs too much. It's out of my budget. The other thing could be lack of knowledge or education about the product. The third thing actually is, I'm willing to roll the dice. It's not required. It's an optional insurance. I don't have to get it, like auto insurance or homeowners insurance, right? So since it's not required, then I may not want to do it. I don't have the funds for it. I'm willing to roll the dice. The other thing also is the deductible. Some people, they look at the deductible, they say, wow, I have $1,000 deductible for fire, theft, all that stuff. But then you want me to have a 15% deductible or 5 or 25% deductible. And that might be like $80,000. You're like, whoa, that's a big deductible. So in my opinion, some people might say, oh, well, I don't feel it's going to cover anything, because the only time it would be worth it is if my entire house collapses. But, who knows, right? If you're in the marina and you're not on bedrock, you have a higher chance of your home collapsing from a large enough earthquake. If you're on bedrock, yes, it is safer. If you've done seismic retrofitting, you can get a discount on your home as well too for your earthquake insurance. So it really depends on the client's risk and what they're willing to stomach. Some people are not, are willing, saying, hey, you know what? I don't, my house is not attached, but it's a single family home and it's touching the next door neighbor's house. I feel like, I'm pretty secure. That's that's their opinion, and that's the risk, that they feel comfortable with accepting.
Mm-hmm. With that though, the question is, if there was something really that big of an earthquake, clearly it's not just one home that would be damaged. It'll be a lot of homes. The question is, will that agency be still solvent for it? Right?
Yeah. That's a good question.
Like, will it actually be, if it was really that big? Because I don't know if you looked into like what happened in the 80s, like when that happened, and I don't know, maybe
Yeah,
I don't know if there was insurance. I have no idea, but
yeah.
what happened at that time? Are they actually able to be solvent to still pay out this kind of massive thing? Because there are these incidents of black swan, and that was actually what's been going on for like insurance providers for some time. Like, look at the hurricanes, these other, there's a lot of these events that shouldn't be happening this common, as an example. So there's always questions like, are they actually solvents, if it did actually happen? Like, what are your
Yeah,
thoughts on that?
that's actually a really good question. So that's why it's very important to choose a good company, a good carrier. They have to have good history. They have to, you can look at their solvency on AM's Best. You can look them up and see what their, how much money they have, and if how much money are they, what are they insuring, the dollar amount, and how much they have to pay for all of that. So that tells you, okay, if all the houses were to collapse, will they have enough money to pay? Fortunately enough, CEA actually insured, if they insure the entire, all their dollars that they're insured for every home in California, because there hasn't been a large earthquake and they were able to cut 40% down in premiums. If you look at their website, and it actually describes their solvency and how much money they have. They actually have $80 million. Oh, I'm sorry, $80 billion in excess. I'm sorry, $18 billion in excess. If they were to pay for every home, they would still have an additional $18 billion left to pay for everybody else if it needed more. But obviously, you only pay for what you get. If you buy $1 million coverage, you're only going to get $1 million, right? You're not going to get extra. But right now, they actually have an excess of $18 billion, which is why they lowered rates by 40% for certain areas. For private earthquake insurances, just check to see if they're admitted or non-admitted, because that makes a difference as well too. So an admitted carrier is, they follow all the standards within California, and they're backed by the state of California, to make sure that they have enough money to pay everything back. If they don't have enough money and they're an admitted carrier, then what's going to happen is they're going to pay you in increments, pay everybody in increments until everything's paid off. If it's a non-admitted carrier that doesn't conform to the state of California standards, then what could possibly happen is, if let's just say they're insuring $100 million worth of properties, and $100 million of it gets burned down, but they only have reserves of 90 million. Then what's going to happen is they can claim bankruptcy, and they don't have to conform to the state of California to get backed up and pay everybody increments. They would just claim bankruptcy and walk away with their hands clean and say, sorry, first come, first serve, take what you can. So making sure that you have an admitted carrier is very important. And then also making sure that it's a company that has a good track history and good enough reserves for everything that they're insuring. So those are three main things you want to make sure you take care of and check when you talk to an insurance company.
Got it. Cool. So we'll get wrapped up pretty soon, but a few last questions for either first-time home buyers or just people not as familiar with the insurance space. What do you think are the top 2 or 3 mistakes people make when deciding on either a policy or a provider?
Mm-hmm.
And if you were to give them just a general advice, as at least to get started, what would you feel like are kind of like the bare minimum things that everyone should have?
Yeah. I think that you should definitely make sure you choose somebody competent, rather than, you can definitely, if you feel competent enough to choose your own insurance coverage online, that's fine. I mean, as long as you're comfortable with it. But the one problem, I'm not going to badmouth any companies, but companies like Geico, they're great companies. I don't have anything against them. They're great companies. But the problem with using somebody like Geico is the consumers may not be an insurance professional. They haven't seen all the claims go in and out. They haven't seen, the losses, what could possibly happen. And then, and Geico is very clear on their coverages where they list, okay, this coverage covers this coverage covers that. But because the consumer may not have the insurance knowledge or seen that many claims, they may say, oh, you know what? I can just give myself the minimums because it's cheaper. Then when a claim happens, they're like, oh, shoot, I'm underinsured. But they don't realize what could have happened. Whereas if you have an insurance professional do it for you, set up your policy and give you advice on how you should structure it based on, what your current, where do you live? Well, what's the value of your home? what's what assets you have, what do you do for a living, what's your income, like how do we have to make sure to protect you. We are advisors to our clients so that we can tell them, hey, this is what you should do based on the information I was able to collect from you. For example, I've had a client that they picked out their policy, and then the reason why they came to me was they said, oh well, I didn't get paid out when I got rear-ended by an uninsured motorist. I said, well, you should have uninsured motorists and they'll waive the deductible if you selected that coverage. And she says, yeah, I think I did. I said, send me your policy. I took a review of it. I was like, Geico didn't lie to them, telling them that there's no cover, there's no coverage here. You can't select this. Basically, she failed to select it, and she ended up with $1,000 deductible that she had to pay out of pocket for getting rear-ended by an uninsured motorist. So, so you want, as a consumer, I would definitely encourage you to pick somebody that's competent, because I would not write my own real estate offer to somebody, because I don't know all the disclosures. I don't know what forms to fill out. I don't know, if I'm making the right offer. I want a professional to do it for me, right? Especially for such a big, large purchase. If you're insuring your home and it's a large purchase, if you're buying a home and it's a large purchase, you want someone that's a professional that can give you proper advice. But do make sure that you're properly insured. If you want to save money, just take a higher deductible. To my clients, let's just say you take $100,000 less on rebuilding your home versus $1,000 more on a deductible, the difference is about $100 for both sides. But I'd rather you be, you'd have to come out an extra $1,000 than to be short $99,000 on rebuilding your home. That's how I see it. But obviously it's up to the client. And that's my best advice. Make sure you're properly insured. Pick a professional, unless you feel that you're confident on knowing, what you're doing on insuring yourself.
No, that's really good advice. Cause I would probably say I fall in that same trap too, because what Geico and some of these online providers have done an incredible job, which, Farmers, State Farm, in a sense, these kind of maybe not necessarily older companies, but their marketing approach is completely different, right? Like Geico is everywhere on ads, everywhere. I mean, it has the brand for sure. I would say the brand is probably more valuable, and I think they probably have a much bigger base, but they give you the sense that I think their initial quote was like, you can say 15%, like 15 minutes or whatever it may be.
Yeah.
Right? So they give you all these things, which it is like their online portal is very slick. I'm a Geico customer myself, but at the end of the day, you have basically a shopping cart of options. Right. And it's your responsibility to pick every single one, whether you know what you're getting yourself into or you don't. Versus, like, especially with yourself, I think the challenge for a lot of people is that, just like in real estate, there's a lot of insurance agents, right? And a majority of insurance agents, just like a majority of realtors, are, quite frankly, not very knowledgeable. And they're actually, it'll be a negative impact than even being a positive impact. So I think there is that stereotype that people get very nervous or scared of. Oh, wait, you're just trying to sell me the most expensive, premium, so you make the most money. Whereas the reality is, it is true on one end, right? If they're a bad insurance provider or insurance agent, then that is absolutely possible. But if they're good, it's really, you're that kind of middle ground of the advisor of the space. You'll talk it through. Hopefully you'll give them the right options, and at the end of the day, they're the ones picked, but at least they have the information that they need to make that decision. Whereas these online portals and things like that, like I said, it's just literally a shopping cart. You have no idea, like, is this $100,000? Is that enough? Is it $500,000? Is this all these random items? And then obviously there's some monthly premium that's relative to it. But it's interesting because a lot of the industry, and same with real estate, there's this illusion that people, they make it feel like people know a lot more than they actually do know, which is a very dangerous mentality to be in. So I'm really glad we were able to do this show to highlight, like, there's a lot of things, like, I personally did not know, and I'm in the business myself, but I'm not in the insurance business, right? And I'm sure I can speak then for a majority of people that there's no way they would even possibly know this information, given they're not even close to being in any of these businesses. So really thank you for those insights. And so, Aaron, like, what are the best ways for people to get a hold of you, whether they have questions on their own policy or they're looking for options with farmers? Like, what's the best way for people to get in touch with you?
Yeah, you can look me up on Yelp. You can just type up my name, Aaron Thach, or you can Google me, and you can get a hold of me by phone, email. Currently, our office is closed to the public due to COVID, but typically I would love to meet my clients in person just because I want to make sure that, we build that relationship as well. But you can always give me a call, email me, and also I love doing insurance reviews for people. Even if they don't buy insurance from me, I like to at least educate my clients, letting them know, hey, this is what you currently have, and this is how it plays out based on your life. You told me what you do for a living, what your income is, and so on and so forth, what you own, what your assets are, what your liabilities could be. And then if you decide, hey, you know what, it doesn't work out, whatever, no hard feelings, but at least you're educated when you talk to the next person. If they're trying to stiff you or if they're trying to overinsure you or underinsure you because they're just trying to beat rates and just win your business, right? So I love doing that with clients just to educate them, because with that extra knowledge, that helps them make a much better decision on who they want to go with, and also with making sure that they're protected rather than, just giving out money and not knowing what they're buying.
Right. No, absolutely. Really appreciate the insights. And we'll wrap it up for this one. Thank you guys for attending another weekly Wednesday Lunch and Learn. This time we had a lot of great information related to all things about insurance. So if you have any questions, reach out to Aaron, and I'll see you at the next one. Bye now.
Thank you so much for having me, Spencer.
You're welcome. Thanks for making it to the very end of my YouTube video. If you like the content, please hit that subscribe button. Make sure you hit that little bell as well, since it'll give you notifications of when my next episode is. If you know of anyone that is considering to buy or sell